Hi, and welcome to our webinar on how finances flow through Jim2. A common thing I hear when I talk to customers is that they don't know what they don't know. And as such, we'll cover each topic from basics to advanced usage to make sure you're all fully informed of each section. I also wanted to let you know that these webinars and other short informational videos are available in our Learning Centre. You can find this on our website by going to jim2.com.au, highlighting resources, and then clicking Learning Centre. Finally, before we get started, I wanted to thank everyone that filled out the survey ahead of this webinar. It was great to see what our customer base wanted to see in relation to how finances move through Jim2. Now I'd like to introduce Ian, our Head of Customer Services, who has a personal passion for the flow of financial information through Jim2, so is the perfect co-host for today's webinar. Hey Ian, welcome.
Passion. Really?
Absolute passion. It
Okay.
comes alive when you talk about it, mate.
Oh, alive. Okay, well, we'll certainly see how that happens during this webinar today.
Fantastic. So for today's webinar, we would like to join the finances on a journey through Jim2 to help highlight the path that is taken by your money when working with inventory in Jim2. Ian, what will our customers gain by understanding this process in its entirety?
Well, there are certain elements of Jim that once you make your decision, you're needing to stick by that decision. And so understanding a little bit more about the general ledger and how the accounting works with the inventory and what the rules are that are quite strict. Well, I think that's some of the stuff we're going to cover off today, and we'll be able to answer some questions maybe, or just by showing it, we'll show you some of the obstructions that people have encountered in trying to make change. I really think too that we're going to see how to influence your general ledger from the inventory. In other words, making decisions about when you create a new code, where do you want that money to appear?
Fantastic. Well, before we start on the different types of stock codes, the stock type financials, and how they move through Jim2, we should probably explain a couple of the mechanisms that influence these processes. I'll just pop into Jim here. The first of these are the GL group. These, in my opinion, are one of the things that make Jim2 so powerful. With them, you're able to designate where the financial information for a stock code will go depending on the use case. That might sound a little complicated, but it's actually fairly straightforward. If we go to Tools, Options, and actually, I might have needed to pop into Setups there. And then in the Accounting section, we can look at Stock GL groups. So I'll just add a new GL group to give an easy way to look at its settings. First is the stock type. As you can see, depleting stock is treated in the same way as special stock. Journal and non-depleting are treated the same, and then applies and labor types of stock are also treated the same. This setting will dictate which GL groups are available for selection when creating different types of stock. Ian, why are there similarities between these stock types, and where are the other available stock types like kitting?
Yeah, well, when we talk about these types of stock, we're talking about the ones that actually influence money. So with depleting and special stock, with non-depleting journal, and with labor and applies, they all influence income when we sell these types of products. When we're talking about kits or packages, what we're talking about there is just a configuration of product, which means that they themselves, the kits and the packages, don't actually drive the income. It's what's inside those kits and packages that drives income. And that's why they're not included in this list, because they don't actually have any correlation to the general ledger.
They're more like containers for other stock that then have their own GL groups.
That's
Makes
correct.
sense.
So when we look at those kits and we're selling something that's coming out of our spare parts and we're selling some labor, then the income is going to report to those two areas rather than one income area that you might see in a general ledger for a kit. I mean, when we look at these different types, they obviously have different characteristics, and I'm sure many of our visitors today understand this. Depleting and special stock, they're an inventory-based type stock code, so we care about them. Many people who have spoken to me about this know I use that term. We care. We want to know how many there are, how many we need, what they're worth. And so depleting and special stock, they share some interesting parts. They share an income account structure, as in they need to know where the money goes. They need to have an asset account so that we know where the value of those products go when we buy them in. And then they also have to have what's called a cost of sales. And looking at your screen there, we can see there's different columns reflecting what we're calling a PO account, which is an asset account, a COGS account, and an income account. Now, depleting and special need all three. Journal and non-depleting, the second choice there, don't require an asset account because in essence, they're not worth something. We don't care enough about them. They're typically used when we sell, we get income. When we buy, we actually have expenses added to our profit and loss. So non-depleting and journal stock, less important, maybe is the way to say it. But nonetheless, when a transaction occurs, they will report to an income account or a COGS account, depending what type of transaction it is. And then labor and applies stock, well, they're just income. So firstly, they're not inventory controlled because we don't care how many we have. We can sell as many as we like. We don't have to buy them. And as a result, labor and applies is only an income account linked GL group. It only puts money into one account when you sell products from that group. Now, yep, beautifully highlighted there with your little dot. We can see that we have some of those fields unenabled when we choose labor or applies because we don't need a purchase account or asset account as we call it, and we don't need a COGS account, just an income account. Virtual stock, which is another type that exists, of course, that type doesn't have any financial implications. Virtual stock is for quoting purposes only, and in fact, you can't trade a virtual stock. You can't buy it, you can't sell it, you can only quote it. So there's no accounting implications for that stock type.
Fantastic. So could you give a quick snapshot of how the GL groups work? And we'll use the depleting and special as an example because they use all three types.
Yeah, sure. So when we're looking at a depleting product, because we obviously care about it and we have inventory control, we have to raise purchase orders in the main to purchase those products and bring them in. So the way the GL group works is once you've stipulated which asset account a particular GL group will report to, you're saying that any stock in that GL group that you buy, depleting stock or special, will report to that asset account when you finish the purchase order. So think about that. I have to raise a purchase order to buy the stock. When I raise that purchase order, I receive a tax invoice and I finish the purchase order. If there's depleting stock, it will report to an asset account, the value from that PO. If it's special stock, the same will apply. It will report to an asset account. And the asset account it'll report to is the one that's in that GL group. I think we're going to see some examples of this as you move along, Ash.
We absolutely will. Always good to cover off though.
Yeah, no, that's fine. That's fine.
Yeah.
I think it'll just, it's going to add to it when we show you some examples of that. Now, I've just spoken about buying something, but when we then sell that product, that depleting product, the rest of that GL group comes into play. If we sell the depleting product, then the value goes to an income account, the value of the sale. And then, of course, the cost of goods, which means the value of the asset, when we sell it, it's no longer an asset, and that value moves across to what we call our cost of goods accounts.
So these groups work for all stock types that have financial consequences, either directly or indirectly.
Correct.
Particularly in the case of kitting, etc.
Yep.
So there is another section that we do need to cover off before we dive too deep into the individual stock types, and that is linked accounts. Ian, what are linked accounts and how do they relate to inventory?
All right. Well, in the main, I think the most common one that we talk about with inventory is our stock adjustment account. Now, stock adjustments are essentially gains or losses. I think we're all familiar with something being broken and needing to be written off, or perhaps even finding something during a stock take and adding to our list, increasing the amount of asset that we have. So the stock adjustment account is what we call a linked account. It means whatever I do with a stock adjustment, it will always have an impact on what's linked in my options. So in this screen here, we can see that we have a stock adjustment account. That is always going to be the one that will receive a value when we write something off or we bring in more value courtesy of a stock adjustment. Now, there are other things that can influence the value of an asset, for example, when we buy stock. We'll talk about linked expenses. So this word linked again. Things like when we receive freight costs and we want to link them to the purchase of those products. Now, we don't see those things here in this screen. Where we see those occurring is when you actually add, for example, an expense order and you link it to the purchase order of the stock in the first place. So there can be different influences to the asset values that come in for depleting and special stock, but primarily it's going to be what's sitting on the purchase order when you finish it.
Fantastic. Well, let's take a bit of a deeper dive into depleting stock, and we'll see where its values fall when moving from a purchase order to a sale. So let's start on our first type. I've got some prepared over here. Depleting and special will effectively work in the same way. And I've got them both set to the same GL group, which is machine parts. Just as a reminder, this is stock that's inventory tracked. So it has costs recorded against the sale when it's sold to help build accurate profit information at the job level. Special stock is effectively depleting stock, so still stock controlled, and the costs are recorded against the sale, with the difference that they're usually one-off sales that you do not wish to maintain as a regular stock code. So Ian, how do we receive depleting and special stock into our system?
Okay. So again, let's go back to that purchase order environment. We need to raise purchase orders to buy our stock from our suppliers. And in the process of bringing that stock in on the purchase order, we use a couple of things to value it. We use the costs per line, as we can see on this particular PO, but we can also have an impact on its costs through the value of freight that is also able to be added at the bottom of the screen there. Now, when we talk about freight, we're talking about taking the value of that freight and apportioning it across products that are in that PO. Now, that purchase order uses status in order to say, where am I up to? And we know that as well. So every user who uses POs uses the status of both received and finish. Received has very minimal ledger impact for you. So yes, it does have a small impact on the general ledger, but it certainly doesn't impact on the asset accounts that we're talking about for the stock. Finish, however, does impact on those balances in those GL accounts. We're saying this product is worth X, and by doing that, we're going to be hitting the general ledger account for the assets for those products, hitting them, increasing them. Now, the other thing, of course, that occurs there is that our trade creditors will be impacted as well, and will owe somebody the money. So values on these purchase orders, whilst they do influence inventory, can also influence our trade creditors account.
Fantastic. So as we can see, I've just completed this PO with all the types of stock that can be ordered so that we can see its effects on our GL accounts. This is all drawn from this job, which I actually created the PO just by entering the stock, right-clicking, and then going through the auto create purchase orders settings. So now that we've got that set to received, let's take a look at a GL account that will be affected. So if we have a look again at our depleting stock is the GL group machine parts, we can then go to tools, setups, and have a look at the machine parts grouping of GL accounts, and we can see that we've got the purchase account as 11312, and the cost of goods account, which I don't think will be affected yet, but we'll just copy that guy at the moment and have a look at what has happened. Okay. So Ian, what can we see here in relation to how this has affected the account?
Well, we can see as we look across those this particular inquiry that you're doing, an account inquiry, and let me just suggest to everybody that account inquiries are great things for you to get your heads around, to understand what's happening in the background. So as we look at this particular transaction, we can see across the top, it says that on the 20th of the 3rd, it had a date and a tran date. Now, for those of you who haven't done the accounting elements before, the date is what we call a document date. That's the date we said that an invoice would apply to a particular purchase order. The tran date is the date we physically did it, which is, of course, today. And it's just telling us that we've debited an asset account with $300. This particular asset account, which was involved in the GL group. Now that $300 comes from finishing purchase orders. Stock standard transaction in Jim2. And so $300 of the purchase order value has now moved to that account.
And the breakup of expenses?
So this would be an apportionment, if you like, we'll use that term, a breakup of things, of values that have come from the freight costs that are associated with this particular supply. Now, most of us understand freight fees are payable. There's something that gets included sometimes within the body of an invoice, and other times it comes as a third-party type of invoice, particularly when we're receiving shipments from overseas. So what you're seeing here is how Jim2 has looked at that purchase order and has said, I can see expenses for freight. I'm now going to apply them, apportion them back to the assets that we bought in that PO. So that value doesn't go to freight. It actually goes to those particular products and in effect makes them more valuable.
Fantastic. So if we then go have a look at our trade creditors account, we can see that the full amount of the PO has been applied to that account to show that we now owe this creditor money.
Correct.
Okay, so now that we've got the stock and their costs brought into the business, what happens when we use it in a sale? If we go to job 374, I'll just edit, and I hope this works. It should work because it's worked in practice. But if we finish and invoice the job, ah, I knew there'd be things.
It's a good example. I like the apply stock. It's just a reinforcement that you can have these built into your jobs so that you can make sure you carry out all the steps.
Absolutely. We'll just do a cash payment. We've got no pricing. I suspect that's going to affect it.
This is wandering into beautiful places here. I'm loving what this is doing.
Absolutely do. So I'll need to unprint that invoice. We got to love it when it all comes together. Unready.
I'm sure our audience has just had a wonderful breather there and they've all gone, yep, happens to the best of us.
Okay, let's try that again. Yeah, we can use the old invoice. That's fine. And of course, now we've got more to pay. Very good. Okay. Actually, I'd just gone straight ahead and put that to finished. Is there any difference in between setting to finished and invoicing?
Well, there is. Finish is usually a workflow step for anyone using Jim. It's really saying I've completed the work. It's certainly not saying I've invoiced the work. So whilst a job has to get to finish to be invoiced, if it was on finish but not invoiced, and that's easy to discern, if we ran a list, it's very simple to see those, then what we're saying is, I've done my work, let's get about and let's invoice it now. Now, once you invoice, that's when the financial implications come through. So in the case of selling something here, what we're saying is we want to see revenue in our income accounts, which is the value of the sale for each of those products. And also, we would see for the depleting stock a movement from assets to cost. So whatever those depleting products cost us, that value now moves across into what's called our cost of goods sold accounts. And again, they're all part of that GL group. We bought the product, the asset value in the GL group went up. We sold the product, the income account and cost of goods account for those products went up. The assets came down. So that's how the balancing works. And what we're looking at here, with the unprint included, which is great, is we're just seeing how the accounts have been hit as far as the account inquiry is concerned. And for those of you who don't know debits and credits or want some tips, just drop us a line. We can give you a bit of a cheat sheet on debits and credits, by the way, to try and help you understand those.
So with this account, we're actually seeing the stock value leaving the stock on hand GL account because the job was invoiced. So it's only at that point that the how do you say it? The recognition of the job is created.
Yeah, that's a good point. I mean, if we have a look, let's stay with that just for a sec, if you would, Ash.
Sure.
To an extent, we have to forget this unprint element that's going on up the top there. But
Sure.
if you look at the bottom three lines there, you can see an entry called COGS for invoice, which is line 3. And what we're saying is let's move that value out of assets and let's move it across into that COGS, into the COGS account in the GL group. So a credit on the asset account means reduce. Okay, so the value has been reduced. Underneath it, though, we see, because it's the same day, we can see the transaction of the purchase order. So the bottom two lines actually refer to when the stock was brought into the system. And that's why there's a debit. So the debit of 300 and the debit of 46.15 is about increasing my assets. And that happened, 5 minutes ago. So we do the purchase, the value goes up in the asset. We do the sale, the asset loses value because it no longer owns that stock and it has now moved.
And of course, that is also balanced by income from sales that is then reported into the income account.
Perfect.
And then we can actually, there's a few more movements here, which we can see the cost of goods for the depleting stock in the COGS sales account.
That's correct. And so that's the other half of that movement we were discussing.
Absolutely. We can see the GST collected for that transaction. And we can also see the trade debtors and the payment coming through to the trade debtors account. So all of these transactions occurred with the issuing of the invoice for the job. To be clear, not on the jobs being set to finished, but only on the issue of the invoice.
Correct.
Okay. So that should round out depleting and special stock. Let's take a look at non-depleting and journal stock. Now, non-depleting is stock that is not stock controlled and has the costs applied to the business when the purchase order is moved to the finished status. When we sell non-depleting stock, the value of the sale goes to the applicable income account. Journal stock behaves in the same manner. However, it can also be used as a negative value in a sale or a purchase order. So where a finished purchase order for a non-depleting type stock code increases the cost of sales value or expenses, journal type stock may be used to decrease the cost of sales account. Was that relatively clear?
To me, it was, and
As mud,
you
sure.
are absolutely correct. So, I mean, when let's think of most people using Jim 2 are going to have non-depleting stock. So, I wish to go and buy something that's non-depleting. As soon as you finish the PO, it's a cost. It goes to your profit and loss as an expense, and we don't have inventory control. With a journal stock, it's exactly the same. If you did a raise to purchase order and you bought a journal stock and the value was a positive, then what you're going to say, what you're doing there is you're increasing your costs. Now, once you've done that, then the transaction is over. If you sell that stock, it's 100% income. If you talk about journal stocks with a negative value, that's where we're actually saying that somebody owes us in a purchase order, for example. And that's a totally different side. That's pushing the costs down, as Ashley said. So it is feasible to raise a purchase order for journal stock which has a negative value.
So when I perform an inquiry, actually, I've just put in the wrong one. So 41060. We can now see the sales value entering the income account uh, from the invoice that we'd raised earlier, invoice 66. Because this is non-depleting and journal stock, though, the COGS have already been applied to the COGS account when the PO was finalised, which was on 51060. The same entries for GST, trade debtors, and payment also apply as they were part of the same job. So we can see 21310, and it was all part of the same GST. And again, 11200 to show the trade debtors and the payment. So the main difference here is that the cost of those goods is being applied at the business level rather than the job level.
Yeah, I mean, the workflow that says I owe a supplier money in this case means, yep, I'm going to have to pay a supplier for things that I've now effectively written off. Now, if you're buying things that should not be written off, then there's a conversation about whether those same products or services should actually be depleting or special. And that's, again, a conversation that business analysts have with their customers every day.
Can you give some examples of common non-depleting stock?
Yeah, I think if you're working in a workshop, for example, you've got a service or repair business, then you're commonly going to buy potentially things like rags, maybe even some lubricant in volume, cleaning equipment, things that you're just really not caring about. The minute you buy them, you're using them, and they're not going to contribute to the cost of a sale. They're simply going to be utilized and used within your business. So they're normally small things. They're things you can't control. So, for example, if you're buying things and there's no way of measuring how many you have, typically we would suggest that's a non-depleting product. And as I said earlier, you kind of don't care. It's like, I need to bring it in, I need to have it, but really, I don't need to have any stock control over it. And
Right.
that also means you don't use procurement or auto create in order to buy those products. You're manually ordering them on a purchase order.
So onto labour and apply stock. These stock types can be differentiated from other stock types because they cannot be ordered. This means that any financial component to them being sold, much like non-depleting in journal, are recognized at 100% profit at the time of the job. Apply stock can be used to create checklists of things to do while on a job. However, these checklists can have finances applied to them. Labour, of course, comes in two forms in Jim2, billable and actual. The labour stock type, however, is only ever concerned about the billable form. The costs associated with labour are only ever attached to the actual labour entered against a job. The labour and appliers type GL group is unique in that it does not need to have the purchase GL account or the COGS GL account populated. This is because you cannot purchase them. In job types, other than some manufacturing jobs, the labour has had its costs associated with the actual labour entries which is separate from the billable labour stock codes. To see the income from the labour and applied stock, we can have a look at income account 44020. So as we can see, this is the labour component that had come in on the job. So Ian, that's really all of the stock types and how they can affect the GL account. Where do you think there can be in terms of confusion when looking at financial aspects of Jim2 generally?
Well, there's definitely a difference in mindset, I guess, between the accounting and the inventory. Inventory control is particularly important to people who do things. And when I say do things, they make things, they procure things, they sell things. The accounting of it, and this is the beauty of Jim2, is it all happens behind the scenes. So the accounting is set and forget. You need to get your GL groups correct. You need to understand how they've been established and set up, and you need to think about the GL groups that would apply to any new product. But just be aware, as soon as you've made that decision and you've decided which accounts are in that GL group and you've decided which stock is in that GL group, at that point, that's the way things will be forever for that stock. So you may have a circumstance where you've got stock reporting to a GL group that you no longer want to report that way, in which case you would need to create a new stock code. You would need to tell it the GL group structure that you really want, and we would need to talk to you about stock adjusting down the old code quantity and stock adjusting up the new code quantity. It's strict. And it does it for a reason, because a lot of our reporting, such as stock valuation, needs to understand the full history of that product and where it accounts. So stock valuation reports, which are comparisons between what's in the general ledger and what the stock, the inventory itself says it is worth, we need to understand the GL groups that it's always been associated with. As far as the accounting is concerned, because it is all behind the scenes, it just happens. Now, it's great to have the understanding of it and have some context to how this flows. And I think that's exactly what we've been trying to do today, to show I do this transaction, this is where it shows up. And understanding that will make better decisions for stock in the future. But if you have any concerns, don't understand things like account inquiries or transaction inquiries, would like to understand more about the way in which the products are flowing these costs and income, then just give us a bell. support@happen.biz. We'll happily assist you and take you through the processes that you need to know.
Excellent. So we do have a question that was sent in ahead of the webinar that I thought we could address. And that was around the timing of when revenue and COGS are posted. Example given was the date a job and PO is created, invoice date that are paid, etc. I thought it might be good to actually call out, because there was a few dates in relation to the PO and to the job,
Sure.
what those actually are and mean.
All right. Well, look,
So,
there's some key elements you brought up a little earlier, such as on a purchase order, when does the accounting happen? Okay, so there are two things to think about here. One is, firstly, the final accounting occurs when you move the purchase order to finish status. Okay. Once it's on finish, the purchase order, it will move the values into the relevant accounts that are linked to those GL groups. The second thing to acknowledge here, which has an impact, is the vendor invoice date. Now, the vendor invoice date, in this case, is what we call a document date. It's the date you said this happened. And that's the date that the balance sheet and the profit and loss accounts will use for the transactions that result from this purchase order. Now, with the vendor invoice date, that date, even though we are on the 20th today, the invoice itself might have been dated the 16th. And that's fine. You can put the 16th in, and from Jim's point of view, that was when it occurred. Now, many of our clients using Jim2 would actually put receive status at different times on their purchases. And again, when they put it on received, they do need to put in a vendor invoice date, even though they may not have an invoice. Now that date at that point should represent when you received the product, the day you got it. And that date can be changed when you do get the tax invoice. So let's just imagine this came in on received on the 16th. The vendor invoice date would therefore be the 16th unless you had a tax invoice with the goods. You then get the tax invoice 2 days later and it says the 20th. That's fine. You can change the date from the 16th to the 20th, but you need to move it to finish to recognize the costs that are involved. And again, just a workflow step, finish means you're agreeing to the number on the bottom right-hand side of your screen. That's the one. So that's how much you'll owe the trade creditor. That's how much the products are worth and the various fees such as freight and account fees that are included. So document date, the date in that field. Transaction date, the date you actually put it to finish. Now,
Makes perfect.
so that's a PO. If we talk about a sale, well, absolutely no financial transaction exists until you invoice it. And again,
So
you can
date of
change the invoice
invoice.
date. Yeah. I mean, when we
Yeah.
do an invoice in Jim2, depending on your security, you can backdate. So you can actually choose a date that has already occurred to say this is when that invoice should have been raised. That's commonly used when you're doing end of month invoicing. For example, on the 2nd of June, you may well be saying this invoice was dated the 31st of May.
Right.
Well, when you invoice it, and that date is then used for what we call the balance sheet and the P&L movements for those products.
Excellent. So I think we can open up to Q&A now. We do have some questions ready to go. So Beck asks, if you sell less, so not the full original purchase PO amount, how is the remaining stock valued in stock GL? Is the apportionment of freight split evenly over the parts of the quantity, the weight, the value? Thanks us ahead of time.
Look, that's a great question in terms of how it's apportioned. So I'll handle that first. You have the opportunity within a PO to nominate how you want to apportion those expenses. Do you want to do it by quantity? Now, when we say quantity, we're talking about the amount that's received. So can I just ask, Ash, if you could just pop back to that PO you had earlier?
Yeah, absolutely.
And when we talk about the quantity received, if you look down the list there, you'll see there's 11111 in received. But the reality is it's really looking at your depleting products here. So it's saying, how do I apportion it across the quantity that was received in that thing? Now that's a very simple PO. There's one unit, and there's one unit of special. So it's only the special and depleting that will inherit any of those associated landed costs or freight costs. If you use weight, that can be one of the apportionment methods. However, for that to work, you do need to put weights against pretty well all your products. And that's a difficult thing for most people to keep on track with that. So imagine that 10% of the freight goes to 10% of the weight. That's what we're talking about there. So if a product represents 10% of the total weight on the PO, it'll get 10% of the freight in that environment. Now, if you're not putting weights against all your products, that's not going to be a great way to do it. And then value is the dollar value of the things you're purchasing. So again, if you looked at a purchase order and one product made up 10% of the value of the purchase order, then it's equally going to get 10% of the freight fee that's associated with it. So that's about the apportionment itself. But if we talk about selling things, well, the apportionment happens as soon as you move it to finish. So you may well have had it on receive status, and you may well have sold 2 out of 10 things on that purchase order. The apportionment still occurs. It still thinks of the 10, and it still puts the costs against them. But by now, when you move it to finish, you've already sold 2 units, and that's fine. It will backdate and put those costs against those products that you sold. In effect, it's what we call a backfill. So it actually values them now with the apportioned cost. So it's not about what is left, it's about what was on the purchase order and received in the first place.
Excellent. Andre asks, when stock is invoiced in advance, what happens in the background?
Great question. So supply in advance in this case, I'm assuming we're selling something that we don't have. And because we don't have it, as in Jim doesn't have it in stock, we're talking about a depleting or special product in this case. Now we'll talk depleting in the main because I think this is where it would happen more often. And it is security controlled. Many of our customers will not permit it. So when you sell something in advance, you're in essence invoicing a client for something that you don't have. And therefore, the transaction at that point is 100% profit. So think about that. I sold, well, a carton. I'll use carton, that's great. I sold a carton, but I didn't actually have it in stock. So when I sold it to my customer, whatever I sold it for is the profit because there is no cost at this point. We don't even have the carton. Now, depending on circumstance, that could be because you've simply said it and you do have a purchase order still to come in, or perhaps you sold the wrong product and that's why it was supplied in advance. But either way, at that point, it's 100% profit when you do the sale. When the stock arrives, so if we take the scenario of a purchase order and it comes in tomorrow and you move that purchase order to finished status, Jim will backfill the cost of the invoiced job. So whilst today the invoice sale is 100% profit, tomorrow it won't be when it does what we call a backfill. Now, backfill is about costing. It's not about quantity. So when you sold something you didn't have, Jim knew you had -1. When you bought it in, it knew you went back to 0. So inventory-wise, it's always doing that balancing. But what's important is the backfill covers the cost. It says, I'll now put that cost to that job. For that reason, we suggest you be very, very cautious with supply in advance. And you do need to backfill on a regular basis. Now, most of the databases our customers use would have backfill automatically turned on in the options. However, you can manually backfill as well, which is what Ashley's showing you at the moment. Backfill really just looks for, do I now have a cost for the product that I sold in advance? That's what it means. You should always do it before you do a stock take session to make sure that you're not counting negative things or negative costings. It's much better for you to leave things that have negative quantity, for example, out of a stock take session rather than trying to include them. Better option, solve the problem before you stock take.
Excellent. So that's all the questions that we have in at the moment. So I'll give a minute or two for any additionals to pop in. But yeah, that might be about all of it. Of course, if you do have any questions about any of the content today, you can always contact support and let us know that you need a little bit more explanation about any part. Oh, we just had one pop in. So Neil lets us know they're using multi-company. So if they bring in an item for $100 from an external supplier and sell it to one of their related companies using Jim2 at a higher price, will Jim2 adjust the average cost for both companies?
Okay.
That's quite in
Thank you,
depth,
Neil.
isn't it? Yeah.
No, it's a wonderful question, and it does talk about multi-company. And Neil, your business is obviously has been using multi-company for a while. For those of you who aren't familiar, it's one database that can have up to 256 different companies interacting with each other, where there's probably common ownership of those companies. The transaction that we're talking about here, Neil, is exactly the same as a normal transaction. That is that a company purchases a product and it then sells it to the other company, and the other company then sells it to the customer. Now, you have a bit of an advantage. Sometimes your company will sell something that it doesn't own. Okay, let me paint that picture. Think of a retail site that sells a product and it buys that product from a wholesale company, and both companies are controlled in this one database. In that circumstance, it's possible for the retailer to sell it before it actually gets it from the wholesaler. It's a supply in advance, exactly what we just spoke about before. But in multi-company, Jim2 will then automate a transaction to move it from one company to the next. But from a dollar point of view, Neil, whatever was on the purchase order and you finished it at in company one is what its value is. When you then did the sale to company two, whatever you sold it for is the value of the asset in company two. So if you bought it for 100, it's $100 off the PO. When you sold it for 150, that asset is now $150 for the company you sold it to, whether that be a customer or company two in this case. I hope that helps. Average cost is not really a concept for Jim2's financials. We track average costing, but it's not used for any accounting as such.
So admin has asked for a recording of the webinar. So everyone that registers for the webinar will receive a link to the recording, and all webinars that have been recorded are available in the Learning Centre on jim2.com. Daniel asks, what happens with the cost of goods sold when you sell stock that's on PO with the received status?
This is great, and it's quite simple. There are no COGS. So when you sell something that's on receive status, we don't have a COG transaction. All we have is a sale that's occurring so that you're getting income from that sale. Once the PO is moved to finish, it will backfill and move across to COGS.
Wayne asks, how do I know if backfill is automatically turned on? I might need some direction here, Ian, but I imagine in options.
Oh, you're doing well. And it's right
Backfill
there.
stock sold in advance, right there.
Now, typically we would expect
so
you to tick both. If you want to talk to us about stock sold in advance from an RFC, that's about whether or not you get a lot of damaged turnover, and so you don't want to pick up the value of the asset when it comes back on an RFC. We can have that conversation with you, but typically you would tick both and you just let it play out. That means whilst you would go to the backfill screen that Ash showed you a little earlier, you'd only be checking to see everything was backfilled.
and that screen's available in stock, and then in the extras section, click backfill to see any that might be outstanding.
Now, they'd be outstanding. I'll just give you this
Please.
suggestion. They'd be outstanding simply because you haven't bought them. So they haven't turned up yet. So if you've got the backfill turned on, but this is showing you a list of things, then it means nothing's met the criteria, which typically means you haven't received any stock that's appropriate.
So probably time for one more question, and I think we've answered it, but we might just go over it again because it can be a little confusing. If Jim2 does the financial movements when a PO is put to finished, is it using the document date or the transaction date to report within the GL accounts?
Yeah, sorry
Definitely
for interrupting
the document
there.
date.
Definitely the
No,
document
not at
date.
all. So again, the document date being the vendor invoice date as shown on the purchase order there. Oh, actually, I will sneak this one in as well. If we've closed the period for reporting, what happens with the date of the backfill entry? Great question.
Yeah, it's a great question. It really is. Now, again, there's a small difference between different companies how it's managed, but I'll tell you the way that I would think most companies would manage it. The settings in our tools and options and our accounting screen allows you to close months and then say what should happen if something was to impact on a closed month. And what we would expect is the setting would allow it to go to the first open period. So if we come down to accounts on that screen, that's great,
That's
Ash.
where it was. Yep.
We can see all the ticks here that are closing off the months back to September. And just to the left of that, you'll see if the financial period is closed, then post to what? Now, our suggestion for most of our customers would in fact be first day of open period. So if you think about what that means, if I tried to post a document date of September 24 or earlier in this database, based on first day of open period, it would actually post it into October. Okay, so that's what I would expect your database would do. So Beck, you might like to pop into tools and options and accounts and just check what that setting is on. If you would like to know more about that, just drop us a line and we can talk to you about why the other option may apply. It's very unlikely to, I think, in most of the businesses we deal with.
Okay, we might call it there. Thank you, everyone. If any more questions do come in, we will get back to you through our support team. Just to recap a little bit, today we covered general ledger groups, what linked accounts are, and the path of various stock types through Jim2. Again, if there are any questions, please do reach out to our support team. They're always very happy to lend a hand, and we'll catch you at the next webinar. Thank you.
Thanks, Ash.